So much has changed in the way we interact with our money. But a lot of us are still playing with the old rules. In a world where technology meets finance, how do we handle that? And how can the bank help me grow my wealth and not just store it? How safe is my money in a world that has AI, technology, and all these apps? In today's episode, we're joined by a market expert that is helping shape this future, Mr. Ali Moosa, and he's going to help us decipher this world and help us grow with it. Ali, it's absolutely lovely to have you with us in the episode today.
It's a pleasure to be with you, Noorhan. Thank you for having me.
Thank you so much. Before we dive into all things digital assets, can you give us a brief introduction about yourself for our audience?
So I've been in international banking for almost 30 years. Before my current role as Executive Vice Chair of Singapore Gulf Bank in Bahrain, I was with JP Morgan for almost 30 years, managing what we call CEMEA region, Central Eastern Europe, Middle East, Africa.
Wow, mashallah. Thank you for joining us. I think by the end of the episode, we would have established a very clear understanding of digital
I hope
assets.
so. Thank you.
Let's dive straight in. So now we're in a world when people are talking about cryptos, they're talking about Bitcoin. People are interested in investing in that line of business. But we also know that digital assets are not just cryptos, it's a world beyond that. So what are digital assets? What do they really mean?
So just as an intro for digital assets, allow me to say that digital assets is basically is a digital in form. It's created and transferred by what we call distributed ledger technology, which is well known as blockchain. And digital assets, it's basically it's created in entirely digital, meaning that it's a natively digital, which is cryptocurrency, for example. And it's not any representations of any physical, like real estate or any fiat money, for example. So it's a native digital. And I think the key difference, just to make it clearer as well, when we speak about traditional finance, for example, or assets, traditional finance and assets are entirely dependent on physical infrastructures like banks, central banks, brokers, for example. But when we move into digital asset space, these are mostly dependent on decentralized network, and it's basically on a blockchain platform.
Okay, so you're telling me it's a currency that operates fully virtually online, and it is representing a digital asset built on something called the blockchain. So when I think about this, who is running that money? How does this money run?
So basically it's decentralized technology. It's very much governed by a technology that keeps record in a multiple locations. And that's why when we speak about digital assets, it's more safer and it can be traceable because the digital assets doesn't sit with one owner, for example, banks. But it's in a public domain, very secure. As I said, it's a blockchain technology that is multiple records can be taken, and it's traceable, and it can be audited as well.
Wonderful. So now we kind of understand a bit of a background, but generally the world knows Bitcoin. And we know that the prices of Bitcoin has crossed the $100,000, and we know crypto as a world. And the market capitalization of crypto as of May 2025 reached about $3.4 trillion. So we're looking at a massive market, and over 60% of that is Bitcoin. Are digital assets only Bitcoins and crypto only, or are there other things as well?
I think Bitcoin is popular because it was the first cryptocurrency that was invented, we can say, in 2009, I think. And it remained, at the core focus of any cryptocurrency portfolio or investments for investors. But definitely there are many other alternative cryptocurrencies like Ethereum, for example, is another currency which is cryptocurrency which is very popular. But Bitcoin got its it become very popular because it was the first cryptocurrency.
Okay, so we're not looking just as a movement that is happening globally. We're also seeing regulators go in that line, which that makes me feel like it's an excellent time to have you on the show, because we have to stay up to the trend. But this field has so many buzzwords, Ali, and I would love for you to help me decipher. One of the biggest buzzwords that are there is DeFi. They tell you this industry is DeFi industry. And these kind of buzzwords almost scare people from wanting to enter it, because what do I mean when I mean DeFi? And I know you mentioned earlier decentralized finance, but what is DeFi? How do I decentralize an industry that has been regulated and really stringent for so many years? How do I decentralize it? And when I go to a bank to take a loan or to pull out money, I have paperwork that proves it. I have a regulator that supports it. So what is DeFi, and how does these contracts get regulated?
So DeFi, as you rightly said, it's decentralized finance, works on a blockchain, and basically it makes lending and borrowing accessible to more public out there. And it's governed by a technology called smart contracts. Basically, you can execute an approved loan on the blockchain without the need for a loan officers of a bank. And everything, as we said, blockchain bring transparency. A blockchain brings more recording of the transactions and the contracts online. And it can be audited and traceable. So even the DeFi is a new financials ecosystem which is developing on a blockchain.
Now, let's say I'm listening to you today and I was thinking about digital assets, and we know from every episode that we film, standard investments or investments 101 has a risk return portfolio for every asset. So as the risk goes up, the return goes up. So if I want to add a digital asset to my portfolio, what's the risk profile looking like? Am I walking into something super high risky, or how do I look at this as an investment option?
So basically, any investment, not only investing in digital assets, needs a very careful assessment by the investors, and it needs to go through certain due diligence, especially when it comes to digital assets, because we know the digital assets, it's more volatile and it's very complex as well at the same time. So that's why I think my advice to any investors when they want to look at investing in digital assets in particular, they need to educate themselves, they need to understand the asset itself, they need to understand which technology it uses, because each cryptocurrency has its own different technology as well. And I think most importantly, they need to educate themselves about the use cases. All these assets or cryptocurrencies has use cases. For example, we describe stablecoin as for payment and right. settlement of transactions.
So use cases is what the currency is used for?
Exactly, and the long-term plans and commitment of the exchange that offers these assets. So there are a number of checks and balances and due diligence that needs to take place before you invest in any currencies. I would also add something which is very, very critical. And I think here in Bahrain, we are much advanced than any other countries. Maybe we are in line with countries like Singapore and UAE. Our crypto exchanges in Bahrain are regulated. So the investors, not just looking at the investing in any crypto assets, but also they need to know the regulatory framework. Is it permitted in the country? Some countries, they ban them. And to avoid putting ourselves into any breach of laws, for example, we also need to understand, the regulatory framework and if the countries permit those investment or no.
Okay, so the first step, I look for someone regulated, or I look for an entity that is regulated by my regulator, just so I can be feeling like this entity is safe. Then when I look at the digital asset, I look at the technology behind it. And this is an interesting twist, right? Because every time we looked at investment products, we're looking at maybe what the product is doing or who is backing it up, whether it's a bond or an equity. But here I look at the technology behind it and make sure that the used cases make sense before I decide to add it to my portfolio.
Definitely.
And is it riskier, Ali, to add cryptos to my investment portfolio?
Look, I think cryptocurrencies, whatever and however we look at them, they have higher risk. And of course, with higher risk comes higher return as well. And it's very, very volatile environment. That's why I think it's very, very important that people, they don't go and jump in such an investment without doing the research. They need to understand, what they are investing in, and what are the return, and what are, the platform which is behind such assets. The reputation of the crypto exchange is also very, very critical. And we need, for example, with the crypto assets comes the custody, and where are these crypto assets stored is another element of risk. And it has to be stored in a very reputable institution or a crypto exchange or a bank, which make it even more safer.
I'm really valuing the conversation, Ali. You're helping me clear out a lot of things. So when I decide all of that, I also kind of have to link it to my risk appetite. So am I an investor that can handle a lot of volatility in my portfolio? Or am I an investor that wants capital preservation and I don't want to lose any capital? Because that will also help me decide if digital assets are something for me. Does that make sense?
It makes absolute sense, because the risk appetite and reward and risk, as we said, is very, very critical. And I think if you ask me, can I tell people to invest in a crypto asset? I would say no. I would say it depends. You have to do your homework. You have to study it. You have to do your research. You have to understand which currency you are investing in. And you have to also understand the providers. And as we say, the regulations, the custody of the storage. All these adds to the risk profile. And of course, I think comes with also a lot of awareness. And luckily today, what I've seen, for example, this interview and many other, white papers, educational, tutorial, educational tools by digital banks as well to their clients, is going towards, increasing awareness of the investors and the customer base. So all these we have to leverage and make sure that we doing the right thing, and we are investing in something that does not put us in trouble. And I think my advice, always start with a small, educate yourself, understand this field before jumping into something bigger.
Such sound advice. Now, there is no conversation that happens in 2025 that doesn't mention artificial intelligence or AI. And now we're seeing that artificial intelligence can help me decide on the stocks that I purchase, where to invest. It can help me allocate money within my portfolio. I can automate my entire investments, whether in digital assets or other. And we're going to this concept of something called democratization of advice, right? When before, advice used to be for the wealthy and the ultra wealthy, now everybody can get the advice that they want with the help of AI. So being an expert into the finance technology field like yourself, what's your take on the whole AI investing element? And is it really going to change the way the people are investing?
Definitely. I think AI and machine learning is definitely a game changer, especially when it comes to decision making, right? I think when creating an investment portfolio, if you have a tool that are going to process massive data to make it available for any investors or a bank or you know, any of the parties that is involved in creating your investment portfolio. Definitely it can help you make a sound decision, an informed decision. And I think that's what we want to get out of AI. I think AI today is a game changer. We cannot avoid it. It's going to make our life much simpler, much easier, because it can you know, look at market trends. It can look at historical performance of a portfolio. It can even look at things like social media sentiments and provide the right reports to the investors, to the banks, to make the right decision. And I think AI is there to serve the human in a much better way and avoid the human errors, for example. That's one use case for AI. And I would take you to the, you know, even further. Today, what I've seen from big banks, even, you know, my previous bank, AI is used for fraud protection. So this means also it's not just giving me tools and reports to make a better decisions for my investment, but also it makes my investment safer. So it detects any, you know, unauthorized activity, and it can, you know, report into any fraud possibility. So that's why I think AI is a very critical for any investment from a decision-making perspective, but also risk management and fraud protection.
So I'm hearing good news about AI from what you said. I'm hearing that there's a world of digital assets that's growing, but I'm also hearing that there's AI technology to help me as a retail user to learn, to maybe potentially invest if I use it as a tool and I educate myself with it. But you raised something interesting because you said, you know, AI helps with fraud. And especially when we talk about digital assets, one of the first things that would come to anybody's mind is, how do I keep my money secure? Yani, we've heard massive stories like the FTX collapse in 2022. Tens of billions of dollars were lost. More recently in 2024, there were data breaches with Coinbase, for example. And for me as a regular user, I'm like, I want to go into this line, but how, if I put my money with a digital bank, how does a digital bank protect my money, given that there were such massive losses historically in this investment line? So what's your take?
Yeah, I think, look, as you said, fraud is a big challenge. And, you know, I was looking at certain reports, fraud is increasing year by year by 10-15%, which is really worrying. And I was discussing with one of the CEOs of a retail bank here in Bahrain, and I said, what keeps you awake? He said the repeated fraudulent that attack you know, against the consumers and the customers. So fraud, it can be in any field, it can be in any world, and more likely in the digital asset space as well. And we have seen the example you have just mentioned. I think, look, digital banks are investing heavily as well at the same time. And I think cybersecurity today is becoming the top priority for any institutions. You can see countries, companies, banks, financial institutions, digital assets platform, their biggest technology investment goes into fraud protections and cybersecurity. And today, I think many institutions, especially the banks, the digital banks, they deal in digital assets. They are creating and enhanced tools to have a multi-layer protections into the customer's assets, for example. And I think one thing which is very, very important to mention here, it's both technology, it's regulations, but it's also human ethicals. So I think if we can manage and make sure that even the human ethicals is being handled in the best transparent way, we can avoid a lot of these fraudulent cases. And one of the things that any regulators in the world that's really put in the hand of financial institutions, digital banks, and crypto exchange is a third-party audit.
Okay.
I think a third-party audit is very, very critical, because when we do approve of safe reserve for client money, it shows that the banks are trying to rebuild trust and make sure that the client money remain safer. So all these tools together are available there, and we need to use them.
So I can see from what you're saying, there's a lot of effort because there is a lot of rising awareness around the issues that come with fraud. But now, me as an investor, I invest in digital assets or any other assets. Whose responsibility is it to protect my money? So when we say, for instance, whether it's fixed income or digital assets, I'm gonna invest in it. The moment I see that this asset is regulated, is it enough to say that my money is protected? Or is there more that I should think about?
I think it's more around the awareness and the understanding of where we are investing. And my advice always for the first-time investors is basically to go into the safe and the basic investment. I mean, today the banks offer many investment vehicles. The basic one is basically term deposit, for example. So I think the investors need to be aware of where they put their money and in which vehicle they invest. And the more they become self-aware of what are the risk parameters of their investments, I think that the safer they are in the longer term. The regulation is there, but the regulation is there to be followed.
Ali, I know that I have picked your brain on a lot of topics, but there is always a part in my show when I like to ask an expert like you to tell me how. So I'm sitting at home, I'm watching the episode, I heard everything you said. I'm aware of the risk that the digital asset will bring on board. I'm aware of the different options that are there. But I want to know how. I want to know how I can start investing. I have a small amount of money. I want to try some sort of a digital asset. Walk me through what I should do. Assume that I have no knowledge, and I want you to walk me through step by step of what I should do to invest, to track my money, and as much as possible to see this make some sort of a return for me.
I think the starting point always, and I will repeat this because it's very, very critical and very important for any investors, is to do their due diligence, is to do their assessments, is to ask an expert, and to make sure that they don't just go into any investment or any currencies without understanding, as I said, the purpose of the currency, the use cases, and the technology they are using,
and where the money is being stored,
and if it's really within the regulatory framework of the country. And I think, secondly, start with the small money, right? I mean, always test, your knowledge. You test the product. Make sure that you get familiar with the process before diving into a bigger investment and putting a bigger money that will impact you in a longer term. And I think this space is very, very highly volatile. So I think you either be a long-term investors, so you can weather the volatility in a short term, or you can be an investors that watch the market every second. So I think these questions to ask ourselves and understand what we are looking for and what risk appetite we are looking to achieve here, it all helps in where to put the money.
Ali, my final question to you, our young audience that listens to you today, the young fintech founders, the young investors, what's something that you would end with an advice to them, or you want them to think about?
I think we need to prioritize our education, our self-awareness. We need to make sure that we read, we look at join webinars, join networking events, conferences, because all these will add skills and values to any young comers to the market. Secondly, I think it's very, very important. AI is the game of the future. we need to make sure that we understand the basic AI and what it can do for us and how it will help us in our day-to-day professional life and personal life. And finally, I think joining some of the community events is very, very critical. And I think this is what we will learn and understand, and we get the real information from experts.
Thank you, Ali. Ali, it's been absolutely stunning having you with us on the show. You took something that is really complicated and helped us break it down. We are very, very grateful for your time. Thank you for joining us.
Thank you. Thank you for having me.
Thank you so much. Our dearest audience, thank you for joining us into this episode of the Markets Talk Show. We hope that you found it both informative and engaging. As always, stay informed, stay invested. We'll see you next time.